Hey everyone, Couch Investor back to another video for today. So, is Intel about to get saved? Because most of you know, Intel right now is not really becoming more and more profitable by the quarter. As we've seen the last couple of quarters, especially last quarter, EPS is coming down, projections for EPS are going down as well. Why? Well, just reinvesting a lot, most of the money in the business, and it's not like the business is thriving like AMD or Nvidia. Talking about Nvidia, they're gonna have their earnings call later today, so I'm gonna cover that after the call is done. So make sure to subscribe and like the video if you don't want to miss that. But Intel, we know that it's gonna take a long time until Intel gets back on top, and that's if they manage to turn the ship around. Now, to do that, they need to invest a lot of money into new products, new technologies, into hiring top talent, but also in building new factories in Europe and in the United States. All of that costs a lot of money.
Show me the money.
Now, of course, we already have the US CHIPS Act and the European one. That's certainly going to help Intel. But since, like I said, the business is not really becoming more and more profitable, so it will need more capital. And this is where this announcement actually helps. So it was announced that Intel has signed an agreement with Brookfield to jointly invest up to $30 billion in chip factories in Arizona. It's called SCIP, Semiconductor Co-Investment Program. Now, why is this very important? Well, because a company like Intel, which is paying a dividend, I do not see them cutting that dividend, even though cutting dividend will free up more capital. But then again, would probably put a lot of pressure on the stock. So, decisions. Now, before we go and look at these announcements and what will actually happen, if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Make sure to check out all the other links in the pinned comment. Alright, so first things first, so we get this out of the way. The transaction with Brookfield is expected to close by the end of 2022, subject to customary closing conditions. And now let's go over what actually happens here. So the smart capital strategy, which was talked about by their CFO in the Investors Day. So what happens there? So there is shelf-first strategy, which is basically this. Effective use of third-party foundry, the use of TSMC, for example. And then all the others are offsets. So customer commitments, government incentives, as we've seen, and then semi-co-invest program like this announcement. Now these offsets, conservatively, they're putting it at a 10% assumption, but pursuing 20 to 30% over the next 5 years. Let's see what happens. Now, Brookfield Infrastructure Partnership has a lot of experience with Amazon, T-Mobile, Berkshire Hathaway, NG, and many more. So these are the details of the partnership, let's say. So it's a first of its kind for semiconductors. They chose Brookfield as their initial partner, and they're going to invest up to $30 billion for 2 new factories. Now, it's very important to note that Intel remains the majority holder here with 51%, Brookfield 49%. And Intel also retains all control of operations and IP. And this obviously will accelerate their IDM 2.0 strategy and factory scale out. Again, it's great that there is money coming in because obviously you need money to build those factories, but time is something you cannot accelerate. It takes time to build factories, as we've seen, for example, with Tesla. So how will this impact Intel's financials? So as you can see here, the first step here is construction phase. That's very capital intensive. So as you can see, adjusted free cash flow is going down. The yellow line is the traditional model. Now with the SCIP model, it goes down but doesn't go that low. And then they do reach break even a bit earlier during the production phase. And then obviously the line goes up gradually. And then of course, how will they use the capital allocation? First of all, the source of funding are the usual ones: customer commits, government, cash from operations, which to be honest is not very high anymore, equity partners, and debt. And then the uses of funding is capacity and technology development, product R&D, software R&D, and other human capital. And then same thing here again, dividend. I don't see them cutting dividend anytime soon. And then maybe even more acquisitions. Now, I do want to add a couple of more things, obviously the benefits of this transaction. So they say here that over the next several years, the structure is expected to provide a 15 billion cumulative benefit to Intel's adjusted free cash flow. So the graph we saw before, now we have a number, and is expected to be accretive to Intel's earnings per share during the construction and ramp phase. SCIP provides Intel the ability to replicate the co-investment model with other partners for other build-outs globally. And again, repeating what I said at the start, building those factories, building infrastructure costs a lot of money. And in 2021, approximately 35% of Intel's capital expenditures was spent on infrastructures. So obviously, these types of investments and agreements help the business a lot. Now add that announcement to the CHIPS and Science Act of $52 billion. On top of that, you have the European CHIPS Act that has added 15 billion euros to an existing 30 billion euros in public investments. And then there is also a FABS Act, which will establish a semiconductor investment tax credit in the United States. Then you're starting to reach a level of, well, not investing would be a mistake. And so to conclude, I repeat myself again, while this announcement is great, this does not mean that this makes Intel suddenly the leader again. No, it will take time. Building factories take time. Building capacity in those factories, ramping up those factories, especially in the semiconductor industry, takes time and a lot of money. It's great, you can build factories, but then you also have to attract talent. You have to attract the best talent out there to build the best technology, whether it's hardware or software. It takes time and it takes money, and especially conviction. Because go and convince someone that works at, I don't know, Tesla, Apple, Google, Microsoft, AMD, Nvidia, etc. to come and suddenly work at a new Intel factory in the United States. It takes time, it takes conviction, and it takes a great track record, which in the last couple of years, Intel does not have. Of course, on a positive note, in the grand scheme of things, this is extremely important for the United States and for Europe. Bringing chip making back to those continents is crucial because in the future we'll need more and more semiconductors, and relying on an unstable region there in Asia is a big mistake. Yes, these incentives, these CHIPS Act, etc., obviously are taxpayers' dollars, but in my opinion, we would rather see this happening than just free money giving away to, I don't know, maybe student loans repayments. So overall, good news, but there's still a long road ahead. And obviously do share your thoughts down in the comments below. Don't forget, tonight, Nvidia's earnings call, I'll cover that on this channel. And as always, if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next one. Bye bye.